Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. I'll introduce Rob here in just a few moments, but as always, we need to cover off some important housekeeping details about the session. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we are live streaming to multiple platforms as usual. So with us live streaming to YouTube, Facebook, Zoom audience, and Twitter as well. We are going to funnel in some questions at the end with the time remaining. So Rob goes through his general presentation, goes through some case study considerations, and then opens it up to a few questions with the time remaining. So just know if we don't get to your question, it has nothing to do with the validity. We just only have so much time for this session. So if you don't get your question addressed, definitely take that as encouragement to attend the insiders meeting, which we unfortunately won't have this weekend due to Rob's dealing with some personal matters, but which will resume next week. And you'll have a much higher likelihood of getting your question addressed there, as there's a 45-minute portion of that session solely based on answering questions. So at any point throughout the session, please feel encouraged to write your question or comment into the Q&A window. Alternatively, we have the chat window as well. So any support related queries I can handle in there. Just make note that by default, it goes to host and panelists. So if you would like everyone on the webinar to see your message, be sure to change that to everyone. That way it'll be visible. All right, well, since we last spoke, Bitcoin is broken below 20,000. So how low will it go? And looking forward to hearing Rob's thoughts on that, as well as interacting with you all as always. So thank you for joining us for this live session. At this moment in time, I'll introduce who we're all here for. That's Rob Roy.
Thanks, Zach. Hey, everybody, and welcome to TradeFinder Live. Welcome to everyone that's joining us on all the different social media platforms. Zach's covered them off pretty well, so I don't need to go through and talk about all the individual ones. As a brief rundown, we will talk about the markets. Obviously, I think everybody's interested in that. Doing a little bit more to the downside than I think most people would have thought, but not what Elliott Wave thought. And then we'll talk about the international markets. And if you're not interested necessarily in trading international markets, I invite you to stay engaged when we go through and talk about the international markets, because every security we look at is tradable on the U.S. exchanges, and there's some pretty good patterns on some of these international markets on securities tradable on the U.S. exchange through ADRs. Then we'll look for a review, and I've got a couple of interesting things to show you of alerts that have been sent to our alert subscribers at EWOtrader.com, and then we'll look at a review of case study considerations from previous trade finders. We'll look for one tonight, and with whatever time we have left over, Zach's already gone through how the Q&A works. So that's it. That's how TradeFinder works. So no more housekeeping stuff. Let's go ahead and get to the markets. So when we take a look at the market, you can see, boy, we are just marching. And that's not what this line means, by the way, this 45-degree angle. But I do like it when markets move in a 45-degree angle. It's a good trending thing. But that's not what this is forecasting. It's just a, here we go from here to there in a 45-degree angle. It just so happens it's marching right down that line, which is kind of cool looking. But that's, again, not the design. The wave 5 is quite a bit lower than what a lot of the market pundits still on the financial networks are talking about. Every single day, they're talking about how they don't think the markets are going to go much lower. And one thing that we can look at is we are kind of holding right around that 390 level. Even though we're marching lower here and the highs are getting lower, we're still closing somewhere in that 390 level. So if you are bullish the market, that's the one thing that you can hang your hat on, is that we haven't significantly broken 390 yet. And when you look at volume today or this week specifically, pretty much everybody's back. Up in New York, a lot of the schools don't open until after Labor Day. So all the traders are back. The ones in the Hamptons, everything else, everybody's back now. So we're at full strength as far as Wall Street's concerned. And we still didn't have average volume on the move today. So even with everybody back, we couldn't muster out average volume. So if you're long the market, you can look at this and say, hey, yeah, we're moving down this line, but we haven't significantly broken 390, and we really don't have a lot of volume to talk about. The VIX isn't significantly moving to the upside, so feel like, hey, we can just hold this area and move back higher, which is a possibility, especially when with what I'm about to show you here in a second with how the markets close. A lot of you know that I look at a 3-minute chart throughout the day, look at live charts, whether it's on our alerts that we have for our alert subscribers or just the market in general. I like looking at a 3-minute chart, no particular reason, just my personal preference. But you can see here looking at where we are at 390 and a little bit below that 10-day moving average, the sellers could say, yeah, we're just a tiny bit oversold. That's why we're not marching down even further, is because we're already a little bit oversold. What I can tell you, something's going to happen tomorrow, and we may not have to wait until tomorrow. It may happen overnight. It may happen in the futures market, and at this point in time, it looks like it might be underway. But what I wanted to share with you is take a look at this chart of the market, and this is the E-Mini futures on a 3-minute chart, and look at that symmetrical triangle that we had. This is right at the close. So you can see that we built this triangle going right into the close. You know what triangles mean? We're going to have a breakout. Which direction? We don't know. On top of that, check this chart out. This is the VIX. How about that for a symmetrical triangle? Also on a 3-minute chart. And it just doesn't get any better than that. So something's going to happen. We're about to get a breakout. We're going to have a significant move one way or the other. Again, if not tomorrow, maybe before tomorrow. And at 8 o'clock, the futures took a nosedive down. So the E-minis are down 25 handles right now. So maybe we have that significant move before the market even opens. So you don't even get a chance to take advantage of it unless you trade futures. But look at that VIX. Look at that symmetrical triangle. They really don't structure any better than that. And you combine that with a symmetrical triangle in the markets as well, breakout time is coming. So that's the theme for tonight. We're going to have a breakout tomorrow. As I said, as of right now, it looks like we're trying to sneak and break to the downside. But we'll see. There's a long time between now and when the market opens tomorrow morning, and a lot of things could happen. But I think that we have a pretty good shot of moving down here towards 380. That's where, to me, there's more support at 380 than 390. It's just a number of the 390 that a lot of market pundits have been talking about on the financial network. So if you're listening to that, you've probably been hearing 390. And we have been there for 3 trading days. So hard to argue with that. But it just looks to me like there's more support at 380. And I would think that was a level that would be closer for a potential bounce attempt. But when we're looking at the VIX, and we just don't really see any sort of panic at all, any sort of significant move to the upside, it's just hard for me to believe that any move higher in the markets is going to be long-lived other than just an oversold bounce. You've heard me. You know my position on this. I've maintained this for weeks now, months even, that we won't put in a significant bottom without a cathartic day. We tried. We went so many days, the puncher versus boxer mentality that I gave you that analogy with the VIX trading at 35. That didn't do it. That didn't put the bottom in. And now we're only just a little above 25. We're not even up to 30 on the VIX yet. Is that going to put a bottom in the market? I don't think so. That's my opinion. And that's all it's worth, is my opinion. But we'll see how the market reacts overnight. Perhaps we turn back around and we head back to the upside. But I will tell you this, we are going to have a decent move in tomorrow's trade. And we'll just have to find out which way that's going to be. So for now, trying to hold 390. I think we have pretty good support at 380. If we don't hold 380, then I think this wave 5 potential forecast here comes into significant concern, or you have to price that in. A lot of people think there is no way that's going to happen. I've seen all the comments. I hear you. There's a few of you out there that are calling for ridiculously low levels that aren't going to happen. But most people don't think that we're going to break the previous lows. That's this low back here that occurred on the 17th. We'll see. We're here to report what the market does, offer some guidance and analysis of what the charts are telling us, and that's what we do. Looking at the TNX marching back to the upside here, and that's not good for the equities market, as we're almost going to, we're kind of about to leave that 45-degree angle that would be right here. So we're going a little bit vertical there on rates. We don't want to get out of control here on rates. The market can handle rates moving to the upside as long as it's not significantly to the upside. I mentioned that back over here when we had this vertical move here. That's what the markets don't want. When you see something go like that, parabolic, then you're probably going to get a pretty significant sell-off in the markets. And we're kind of trying to move a little bit higher there. So hopefully that doesn't occur. And then the dollar, some of you posted on the last YouTube update. And by the way, if you're watching on YouTube and you haven't been to our YouTube channel, please visit it, Elliott Wave Options. Look at the last recording. The dollar was kind of right here at a double top. Some of you are saying, oh, the dollar's double topped, we're headed lower. But this big zigzag pattern here says, well, we're not done going to the upside. We're going to 112. And with today's move, breaking above that 61.8% extension pretty significantly, it looks like that's where we're headed. So we're going to see likely a dollar at 112, and then we'll figure out where we go from there. If the dollar continues to move higher like that, interest rates continue to move higher, tell me where the catalyst is for the equities markets to move significantly higher. Yes, we can get some oversold bounces, but where's the catalyst for a significant move? I don't think we have it until the Federal Reserve gets this rate hike thing out of their system, and then we flip over to cutting rates. That's when we'll have a significant tailwind to the market, and we look at markets moving significantly to the upside. How long will that be? I don't know. We'll just have to wait and see. It's not going to be the next meeting or the next couple meetings, probably after the first of the year, sometime before we get to the point where maybe the Federal Reserve realizes, hey, we've raised rates too much, we've slowed things down too much, and we need to start injecting liquidity back in. It's all about liquidity. The markets move with liquidity. You can talk about fundamentals, you can talk about all these other things, but liquidity drives the market. If you're taking liquidity out, it's hard for the markets to go higher. When you're injecting liquidity like crazy, it's hard for the markets to go lower. It's really that simple, and it's important to watch what's going on from that standpoint. Now, everything in between, not so simple. Figuring out patterns and stuff. That's why we look at Elliott Wave, because to me, it's the most accurate technical indicator that exists, and it has been pretty doggone spot on here lately, even confounding a lot of market pundits with just the move down below 420. All right, so not much else we can say about the U.S. markets here. Zach mentioned, let's just go ahead and take a look at Bitcoin, and we'll see where Bitcoin lies. And there you go. There's that break Zach was talking about, where we broke below 20,000. And are we going to hold it this time? As of this recording, we're below 19,000, right about where this says. And so if we can't hold this 20,000 level, I think 16 is next. And as you've seen with a lot of the previous recordings, honestly, there's not much in the way till we get down towards 12. And that's where some real significant support comes in. Now, I'm not necessarily saying that we're going to get down towards 12,000. I'm just saying that there's not a lot of support there. We still have to break this low from the end of June and July 1st here, but we're awfully darn close to it. 18,591 and the low today 18,983. So we're getting awfully close to that low. And if we break that, I've been talking about how the longs have been hanging on to the cliff with their fingernails, desperately trying to hold that 20,000 level. Well, they lost the grip today. Can they get it back? Those of you that have been watching my recordings know this. You need a second day, a follow through, a confirmation day. So this break below today, in the end, doesn't really mean anything unless we follow it through tomorrow. And I know those of you that are newer watching, I know it trades 24/7, etc., but there's an end of day print just like there is for the futures for end of day charting, etc. And so that's what we're looking at right here. So we'll see how that plays out over the next couple of trading days. All right, so let's take a look at some of the other markets on the diamonds, see where the diamonds are. And I think you're going to find that the stories are pretty similar. And that's starting to get a bit more vertical. Look at the S&P kind of coming down that 45-degree angle. And we're a little more vertical now on the Dow. Now, the Dow had been holding in there. And I've been saying now the Dow's kind of morphing into that's where the value stocks are now. It's what it's viewed as, where growth is in the S&P, and it didn't used to be that way years and years ago. The Dow was it. That was king. The big 30, Dow Jones, the industrial companies. But it's a little different world now. And so we're starting to deviate away from that 45-degree angle a little bit there, as you can see. But we are near a point of support on the diamonds. 310 is going to matter a lot. So we're getting there. It's interesting that the Dow was holding in there better. Now it's worse than where the S&P is because 380 is that same comparable level on the S&P. We're almost there on the Dow there at 310. So can it hold that or not? We'll have to wait and see. And then looking at the Qs, we've talked about this so many times that still feel like the Qs are going to underperform regardless of what happens in the markets. It's just very difficult for tech stocks with rising rates, inflation, et cetera. None of those things are good for tech stocks. And we have a pretty doggone good impulse move to the downside. So we did this, I've shown you this before, but the perfect 61.8% correction, exactly what is supposed to happen based on Elliott wave. When a wave 5 ends, that's more than 100% extension. You retrace 61.8% of the wave 4. That's exactly where we went with a doji, and we've been headed down ever since. So any of you out there that are Elliott wave haters, you need to put those emotions aside, start to take a look at something that can really help you in your trading, an indicator that's really, really been spot on with the market. I mean, I don't know that anything else could have called it to a T like it did. Kind of a play on words there. We have doji, so calling it a T with that reversal to the downside. So where do we go from here? Well, that's an A wave impulse. We'll see where that winds up. And then when the B correction starts, likely if we kind of stay in step with the Dow and the S&P, we're probably coming down to 280 on the Qs before we get any sort of significant support. So let's look at the IWM. We've been able to break 180. We've been holding in there at 180, and we did today. Broke below it, closing at 178. But again, you need that second day, follow through a confirmation day. 180 is kind of no man's land, though, in the IWM. We've talked about this numerous times as well. The trading range for the second half, or starting after the first half of first quarter, I should say, of this year has been between 170 and 190. So just kind of hanging out there, also getting a little more vertical to the downside from that 45-degree angle line. So when is the VIX going to kick in? When are people going to start to get really concerned about what's going on? The longer it takes, the more downside there is, in my opinion. Breaking below 180. So now we're in that same boat. Need a second day, need a follow through or confirmation day. Let's look at the EWA. Let's see what's going on in Australia. We talked about this where we tried so desperately to hold 22 and they haven't been able to do it, breaking below that. So there's some support, significant support. So you're seeing that even though it looks like there's more selling in order for the near term, there's some support, some pretty significant support not too far away. Is that going to yield maybe a tradable bounce? It could. So, here, we close at 2147. So not too far away from that 21 level. So perhaps we're going to get to the point where we have some tradable upside bounces, just not quite there yet. The diamond's the closest one to that. Looking at Canada, yeah, all the way back down here to 33. Same scenario here as far as the bounce. Talked about this right back to 61.8. Exact same thing the Qs did. And so here we are back to support. Now this one's at its support already. In fact, it got there last week, bounced up, and now we're headed back down to it. Hopefully the U.S. markets give more of a bounce than that when we get to the support levels. But is that a precursor of whatever bounce we get from this support is short-lived and watch out below? Could be. The futures have flattened out now after that drop. Something, whatever happened right after 8 p.m. Eastern time. And that's when we had the drop in the futures and kind of gone sideways since then. So looking at INDA, and this has been the place to be, and it's still amazingly holding in right at that support level. You can't help but be impressed with what the market in India has been doing. Now we're starting to see a little bit of a triangle build here. So we're going to want to see what the ADX looks like. How low is the ADX? Is it getting down there? It is. And you can see it's not quite to 15 yet. So we're not quite there. But we're starting to build this triangle here. And it's, what, about a 2-point triangle? So something's getting ready to happen with the India market. We're so close to disqualifying this 5-wave pattern, but not there yet. This 5-wave impulse pattern to the downside is still technically qualified by the rules. Now, if we break to the downside out of here, we're well on the way down towards that wave 5. If we break to the upside, we probably do disqualify the 5-wave downward impulse pattern. Then we might be looking at the India market leading things back to the upside. So I think we're going to find out, certainly by the time we talk again next week, we'll know what's going to happen out of that with that triangle. I know it's not a really big triangle. Elliott always said, don't forget the small triangles. Everybody wants those big triangles with the big breakouts. The little ones matter too. The little ones work. You get the breakout. They matter. So let's see what's going on with poor Germany here. Not as bad as you might have thought. And that's because we're already down at the wave 3 low here, trying to hold that area. So literally not to only about a point movement down over the last 2 weeks or so, trying to stay in here at that wave 3 low. If we give that up, which I think is highly likely, then we're down to that 19 level. So I think that's probably what happens with the EWG, but it's trying to hold 21. So let's give it the benefit of the doubt until that level actually fully breaks, if indeed it does. Some of you on YouTube have asked for a look at gold. We haven't looked at gold in a couple weeks, so let's go ahead and take a look at that. At some point in time, we're going to get a bid in the metals, but it's not now. You can see that movement down. We had this little bit of a bounce, tried to get up towards 170. That was a significant point of resistance, and we just couldn't do it. We didn't even really get there. We got, what was the high there? 168 was as high as we could get. We traded 4 days up above there and then just gave it up. And now we're in the wave 5 to the downside. And we're right here at the wave 3 low on gold, and had got a little bit of a bounce off of that low on the 1st of September, but we're right back to that level, probably heading down to this new wave 5 low. So not looking too good for gold. Waiting for that bid to come into the metals, but it's not there now. And looks like a pretty good short at this point. If you want to be a touch more conservative, let it break this level. Let it break this low right here at 157. It breaks below that. You have plenty of room here because we're at like 147. So you got a 10-point move there on the GLD, which is a pretty nice size move on gold. So let that play out. Another thing I wanted to share with you is on our strangles in EWOtrader.com. This is our alert service where we actually send out an alert for entries, any adjustments, and exits. And so when we do this TradeFinder, we look for case study considerations, but you're on your own. So the difference between that and the alert service is in the alert service, we're actually sending you, guiding you, holding you by the hand from the entry, again, any adjustments we may make, and the exits. I just wanted to show you this real quick, that we do have puts on the Qs and the SPY. They're both up about 10% right now from the moves lower. So those are there. And then we were able to, we hadn't really been very active in our volatility portfolio, which is the strangle portfolio, because the VIX has been so high. And that, you might think that's counterintuitive. Wait a minute, a volatility portfolio, that should be doing well when the volatility is higher. But the volatility portfolio is strangled, and you want to be very careful not to put a strangle on, because you're buying the call and buying the put. We set them up mathematically based on how the math works, the delta curve, gamma, etc., to where if the stock breaks out, we're mathematically guaranteed to make money as fast as possible. But we have to have the breakout. It doesn't mean we're guaranteed to make money. Saying if it breaks out, the math is in our favor to make money as fast as possible. However, when the VIX is above 25, you don't really want to be putting those on, because you're paying so much premium with that elevated VIX and volatility that even when you get a breakout, you can actually lose money. Now, our AI-based time strategy, most of you are familiar with that. We've been talking about that a lot. That's our level 1 portfolio. Has been doing amazingly well. Still haven't had a losing month in that. So this is a great strategy. But I wanted to talk to you about the volatility portfolio and how we've used AI in examining the risk management of the volatility portfolio, because risk managing strangles is important, because time decay is a significant issue. You're buying a call, you're buying a put, so you're getting a double whammy on time decay. So our AI has told us that right around the 21-day mark is when you want to get out. So we had this strangle on TSM, and you're thinking, all right, Taiwan Semiconductor, we got all that rhetoric going on with China and Taiwan, could be a big breakout. And we had a nice ascending triangle here. The ADX was really low, and we just didn't get that significant of a move. We did get a breakout, but it gave us a false breakout to the upside first, and then the big move lower, which is a good lesson there. Don't ever take the other leg of your strangle off until you have a confirmed move. Those head fakes will get you every time. So if you'd have taken the puts off thinking, hey, we're breaking to the upside, I just want to let the calls run, get rid of the puts, then you would have been in trouble when we broke lower. So we came down here and we're right at the 21-day time frame, which is what our AI tells us is okay, right at 21 days, 21 to 24 days is the sweet spot there. And you may want to consider taking it off, win, lose, or draw at that point in time. So that's where we were. It wasn't much of a gain, but we were following along with what our AI said on the risk management, a little over a 2% gain. So if you're paying commissions, pretty much covered commissions. So call it a break even, non-event type of a trade. But we did have another one on at the same time on Twilio. And so you look at Twilio, and then we had this really nice descending triangle here, right around 80. We were trying to break out to the downside there. We hadn't had the confirmation day. And then we get follow through on that break to the downside. Now we're at the point where we're oversold. Look at that separation from the 10-day moving average. Now that wouldn't have worried me too much if we hadn't had the gap. So not only were we oversold short term, but with the gap down, and you can see we reversed, but we actually were able to send that out right near the low of the day before it recovered back up. But that gap was concerning. So if you call it break even on TSM, 13% gain on Twilio. And then I wanted to come back and show you where both of those are. So you look at Twilio, that's where we got out. And then here's where we are above the price that we got out, with 5 days, with the holidays, etc., 5 extra days of time decay. We would have been forced to absorb had we not exited on the first like we did. So good exit there. And same thing on TSM. That's where we were when we got out. And here we are 5 days later, perhaps a half a dollar lower than where we got out. But again, absorbing 5 more days of time decay in both the call and the put. And so good exits, at least at this point in time. Now, if they both tank, you can look back and say, hey, you should have hung in there and stayed longer. But we're following our rules. That's what I'm trying to say, is that the AI is giving us a time frame. So we don't want to keep them on forever. And then we're also looking for overbought, oversold conditions as far as potential exit signals. And we were getting just a little bit oversold here on Taiwan Semiconductor and on Twilio with that move lower. Look at the separation there with the gap down in the 10-day moving average. So I just wanted to share those with you. It was nice to be able to start putting strangles back on again. Now we have the VIX barely back above 25. So we'll let the VIX come back down below 25 again. That's kind of our guideline there. But we're in the neighborhood, and boy, with the VIX the way it was, it sure was tempting to put some on, but you can also let them break out and make the directional move with whatever happens at that point in time. All right, so now let's go through and review some of our previous case studies. So we have Reliant Steel, which we first looked at, and this is one that has just been amazing to me, how it just doesn't want to go down. And it's trying now. So there was the entry, and we've adjusted this to the downside, and the key is 200. So we've made a pretty nice move down here. If it got above 200, we were going to go long, but it's broken below that. Got a little bit oversold. You can see here a bit of a doji. So perhaps that tells us that the selling is going to resume again tomorrow. We'll see how that plays out. HZO, this is a retail stock, which is retailers are having trouble. Now, the key is what happened today. So 35, if you can't hold 35, then this is a great short. And so we'll be watching very closely what happens tomorrow with this. If it breaks below 35, we'll go to the short side really hard on this one, because you've got a lot of room. Down at 25, that's a 10-point move on a $35 stock. That's a big move. That would be a great options trade. So we'll be watching HZO very, very closely tomorrow. MOS, another one that's finally started to come to the downside. And you can see we had that vertical move. So we got a little bit below the 10-day moving average. We bounced back up to that and then hit it on the high today, and then back down, but we're sitting right on the top of the 50-day moving average. So probably don't want to do any adjustments there yet until you see how it handles the 50-day moving average, but it couldn't get back above the 10-day, which is key. And then more recently, we don't have very many what would be considered open case study considerations anymore. So we had LUV, that was a strangle. And so let's go back. That was on the 23rd of August. So here we are there with our ADX down around 13, coming to the upside. And if you can see there, we were at just under 38, and now we're down at 36. So 1.5 to 2 points move lower there. So that's looking good so far. And then last week, we looked at another strangle. Probably won't be able to do that tonight, though, with the VIX being higher. Look at that move today. Now, how cool is that? So if you go back and look at where we were just last week at 44, and then you look today below 42. So that one's getting awfully close to where you would start thinking about taking that off. So really good looking trade if you follow that one from last week's TradeFinder on the big move lower today, 2.33% or so lower on that one. So both of the two strangles looking pretty good. So you can see why we're excited about the volatility portfolio. Just like to see that VIX a touch lower to enter one. So with the VIX right around 27, don't really want to do that tonight, but let's see if we can find something else, maybe directionally based, that we can look at for tonight. And there is one impulse stock, CoStar. It's probably going to be an upward Oh, was that an earnings report? I'll put the earnings on here because we had a gap up today. Wave 3 to the upside. I mean, you don't see too many of those right now. The DMI, the ADX is, so you had a big move up, came back down a little bit, heading back up. That actually looks a whole lot better than I thought it was going to. But let's see, was that earnings or is that just something else that occurred today? Not earnings. So I don't know if there was any news about this, but a gap to the upside today. The DMI is trying to move back up. Sure looks like it wants to go to 85. Hate these gaps. You got one right here that hadn't gotten filled yet. And now we have another one. So we had a doji there on Friday. And then now the gap up today. That's the most concerning thing to me is these two gaps. You look at the 10-day moving average. We weren't overbought until today with that big gap. But the other side of things is that we did gap above resistance there at 75. Opened right on it, traded and held it. Let's see what the volume looked like. Look at that. Something happened today. Maybe somebody knows what the news is and can let Zach know and he can relay it to me. I don't know what the news was that happened on this stock today, but something happened to have that kind of a volume spike. Wasn't an earnings report, but something came out. So if it's an acquisition, then we don't want to mess with it. But pretty interesting there. So we'll make a side note of that one. CSGP. All right. Interesting looking chart there. Let's take a look at some. Want to look at some bearish wave threes? Why don't we do that? And there's a bunch of them. Let's look at PayPal. Carvana. That might be a good one. Take a look at that one too. Salesforce is on there. You guys ask about that one periodically. PayPal drifting lower. Had a pretty good bounce there. I don't really look at the DMI too much on the wave threes, but just wanted to see. CCI is kind of low there, and it really is trying to hold 90. So maybe we can find something that looks like it's breaking down a little bit more than that. Let's see what Carvana looks like. We look at Salesforce. That's ugly, isn't it? After that big move to the upside there, but it's going to try to hold 30. Same thing. Yeah, these are kind of looking like a good part of the move is over. And you can see there's support right here. Now, what we can do is put these on a watch list. Like there's a doji there today. If it breaks below 30 tomorrow, then that's a great trade because it's going to 20. So you can make a note of that one. If Carvana breaks 30, it goes to 20, but it's going to try to hold 30. So if the futures reverse and we end up breaking to the upside out of that triangle that's on the futures tomorrow, then perhaps it holds 30 and moves higher. But I would certainly put that one on a watch list, which I'm going to do right now on a break. So CNVA on break of 30. All right, so let's watch that. Let's see if there's something else that we can find that we can be a bit more definitive about. A lot of pharmaceuticals in there. It's always interesting when you have multiple stocks in the same sector. Nordstrom, we already have a time strategy trade on that, so don't want to look at that. Snap, we've got sideways movement there too. How far did Snap bounce? I don't know. Maybe that could be one coming back down to 10. 10 cents. It already moved down 45 cents today, so it's only another 77 cents. So we won't look at that. See what else. Then we can look at AbbVie, since there's so many pharmaceuticals. Well, we tested, I like that. We tested 140. You can see here. And it looks like we want to come down to this 130 area here. So let's do that. Let's do this one. Watch the doji though. As long as we stay below 140 tomorrow, so if there's any sort of a bounce or whatever, as long as, so that's going to be our case study for tonight. 9.6 will be a BBV. As long as it stays below 140 on the open tomorrow. So if it tries to bounce above 140 off the charts, no look, but if it holds that, just a little concerned about that doji there. But it does look like we've broken below support. We're back testing it, and then the next level support's 130. Looks like that's what wants to happen there with AbbVie. So there we go. All right, with that, Zach, I'll go ahead and open it up to questions.
Sounds great. Thanks for that wonderful presentation, Rob, as always, and even finished a few minutes early. So well done there.
Yeah.
I'm sure everyone is appreciative of the extra time for questions. So I was reading up on CoStar Group. We had multiple subscribers from both YouTube and Zoom write in saying that CSGP will be joining the S&P. So that's obviously big news.
Okay.
But also read that they've reported are going to report very strong earnings for Q2 with 13 million higher at the midpoint compared to previous guidance. So
they got it up and they got admittance into the S&P. That's usually the kiss of death, though. A lot of people, like, that's the move today that occurred. And then a lot of people think, well, they're all going to start buying it now, and it's going to continue to move higher because of the funds that are geared toward, like the SPY, that are geared towards following the S&P, et cetera. But when you get the news and you get that big move, it tends not to move significantly after that. So maybe it drifts higher, but if that's what's going on, then I would have liked it if it was just the earnings without the S&P part. So then I would have felt stronger about a continuation on the move to the upside. So I think maybe I'll pass on that one. Thanks for doing the research, though, and thanks for everybody that wrote in. Appreciate it.
right, yeah, no, I couldn't agree more with you. I mean, the 13 mil increase is definitely a positive sign, but as you said, there's a lot of gray area with joining the S&P, and so all right, moving to some questions here. First one's going to be from Manuel on YouTube. NEM oversold with good dividends?
Gosh, you would want to think so, wouldn't you? But then you look at that chart of GLD, and same space. I know Newmont has more metals than just gold and stuff, but gosh, we broke below 45 when it tried to hold it for so long. And in a ideal world, and you've heard me talk numerous times that the market very rarely gives you the ideal scenario, but in an ideal scenario, you go back up and test that level. You can see 45 going all the way back to what year are we in? 2020. 45 was a big deal. So breaking below that is significant on Newmont. So is it oversold? It doesn't look like it. The CCI has bounced off the extreme point low. The DMI isn't that severe. So, you're getting another leg down on CMF. I don't think we're oversold there as much as I'd like to say that we are. If you wanted to be conservative, you'd wait for a bounce back up to 45 and then put a short position on, but you might not get that opportunity. We may be headed lower from here because that 45 level was so important. And then, there's 40 is pretty good, and then 30. So, maybe it tries to hold in here. I don't know, but it doesn't look like it's as oversold as you would think.
Yes, indeed. Alrighty, next up we have Brian, who's got a couple symbols for you. Please look at PG and BP.
All right, Procter & Gamble. Finally starting to break to the downside. It had held in there pretty well, but now with the Dow selling, it's breaking down pretty significantly. Interesting. We're doing some beta testing on infusing AI with our impulse strategy. I know our impulse portfolio subscribers are really excited about that, and there haven't been a tremendous number of signals, but this was one as far as a wave 5 sell. And so pretty exciting to see that one breaking down like that, lending more excitement to basically having AI involved in all of our portfolios, the time strategy, the volatility, and the impulse portfolio, which is the directionally based one. So seeing that continue to move down like that is pretty cool stuff. So it may try to hold right here at 135 because it is just a touch oversold from the 10-day moving average, and there's a little bit of congestion there. Maybe it tries to bounce from here. I think that's going to have a lot to do with, now the futures just took a little bit of a bounce up after going sideways from the drop. So the futures now are down 18 points. Again, long time between now and when we open tomorrow, and perhaps we end up breaking to the upside out of that triangle by the time we open. But it's going to take that, I think, for Procter & Gamble to mount a bounce off 135. But holy cow, if it doesn't hold 135, then you're going to see 120, and that's a great trade. So at this point in time, why be too aggressive? Maybe it bounces a little bit, closes this gap with the 10-day moving average, but on a break of 135, you've got a great trade down to 120, and that's 15 points. So I'd just be a bit cautious on that one. Let it give that break of 135 and then enter to the downside. So what was the other symbol?
BP.
Well, BP. All right, so pretty significant double top right there. And then we tried to run to make a third attempt. And this is interesting because it didn't quite make it, so it doesn't quite follow this. But my mentor, the one that I really learned a great deal about options from, used to look at these when you get a third test of the same price level, and he would call it third time's a charm, just a normal cliche. But basically what he meant was on that third move, whatever happens from there, that's the one that holds true. So if we move up here and we fail, then we're looking for a downside move from there. I don't know if that quite qualifies because we didn't quite all the way make it back up to that high. We got awfully close though, but we're building a little bit of a triangle here, and it's certainly hard to see how that could be a movement lower with what Russia's doing, etc. But then you have to also think that if we move into a significant recession with elevated fuel costs, people stop driving as much. That could be your catalyst for a move lower. But I think what I want to see is where we go from 31. If we start to break out to the downside from 31, then we're easily down here at 28. And you never want to try to pick a direction on a triangle, let the triangle break itself out. But you could kind of lean towards watching this one to see if it breaks lower, with the fact that it was kind of a third test of the high, and it couldn't get up there, and it's kind of failed. So again, never pick a direction on a triangle, but would not be surprised to see that one break to the downside. If it breaks higher, then watch and see what happens at 34.
Yes, indeed. Thanks, Rob. So I know we already covered Bitcoin, but as you know, with me being into crypto, I always like to hear your thoughts on that insight there. I was just going to mention that Will and Kevin, Will says that's going to 10K. Kevin thinks 15K. But even though I see you brought the Bitcoin chart up there, the question is actually going to be in regards to Ethereum, as Danny asked. Would be cool if Rob could look at the ETH chart. It's decoupled lately.
Yeah, it's really trying to hold. I know this is one you're interested in too, Zach. You'd really like to see this one break down so that you could add to your position there. But when looking at this support there at 1200, you're going to find out pretty quick because you got a little triangle there, just like we had in Bitcoin. Now, Bitcoin broke to the downside. Which way is Ethereum going to go? But it's a nice little triangle. It's extremely well formed. So it's at from what, call it 14 to 20. That's a big triangle. That's a 600-point triangle there in Ethereum. So if it starts to break to the upside, it may be off to the races because it will probably break above this resistance at 2000 if it does break to the upside. But if it breaks lower, it's coming right back down here to that 12 area that it was before. So keep a close eye on Ethereum over the next couple of trading days and see which way it goes. You've got a pretty nice trade either way. As far as if it breaks to the downside, you got a much lower price to add to your position. If it breaks higher, then you might want to catch the momentum run to the upside to get it. But that's a nice looking triangle. So it's been holding right in this 1600 level for what, 2 weeks plus. And then you can kind of go back to all the way into July. It's other than this one little test of 2000 there when it came back down. It's been at this level for quite a while. It doesn't look like it's going to stay there. We're going to have some sort of a move out of Ethereum. I know people don't like it when it's a 5-wave impulse pattern to the downside. People don't like it when you play both sides, but that's what a triangle is. You don't pick a direction on a triangle, because you're flat out guessing. There is no rhyme or reason. Even with a 5-wave impulse pattern to the downside, even Elliott himself said the triangle takes precedent. He always said that the corrective patterns, flats, triangles, and zigzags, take precedent over the 5-wave impulse pattern. That's why we talk about them so much, and that's why we directionally trade the zigzags so much, because they're strong, powerful patterns. But as far as Ethereum, back to that, let's see which way it goes. And you're probably going to break 2000 if it breaks higher. You're going to be at least back down to 12 if it breaks lower. So I don't think you have to wait much longer. A couple days maybe, and you'll know.
Very well. Yes, thanks for that analysis there, Rob. I will basically be watching that chart around the clock. All right.
Well, don't do that. You got to sleep sometime.
Every now and then, got to take naps, right? So we'll go back over here. Eric has a question. Hi, Rob. Thanks for your time. Please, can you look at PBR?
PBR? B as in boy?
Correct.
It's funny. I always look at that as perhaps blue ribbon, but I know it's not. It's Brazilian oil.
Just slightly different.
Slightly different. Yeah, a tiny bit different. You can see a pretty nice triangle forming here or there. We didn't really have that big of a triangle on BP, but boy, that's a pretty nice triangle there on PBR. It looks like it wants to go consolidate a little bit longer. The point of the triangle right here at support resistance at 14, which is pretty interesting. Let's see where the ADX is getting down there. It's down around 15. It's getting down there. But it does look like there's room here for a little more sideways consolidation before the break. But that's what, 12.5 to 15 now. This is going to be a 3-point move at a PBR. So, wow, we're going to see some pretty decent moves coming up here soon. But again, it's a triangle. The point's right at support resistance. Either put a strangle on it or just wait and let it break out and see which way it's going to go. But 3 points on a 14, that's, a 20% move. So that looks pretty interesting. But again, I can't Can't tell you which way. You guys are giving me a lot of these triangles tonight, so that's kind of cool. But I know you don't like it when I play both sides, but that's what you have to do.
Yeah, I mean, in essence, that's essentially what that strangle strategy is, right? So,
By the way, look at this 3-point breakout, takes you right down to support at 11. So if it breaks to the downside, there's nothing to stop it before 11. If it breaks to the upside, then you're probably up here at new highs around 17. So there you go. There's your price targets.
all righty, very well. Next up, we have Duran SLB directional move.
SLV or B?
B, no,
B.
not silver.
So
Yep.
Schlumberger, everybody's in oil tonight. All right, so lots of oil stocks. Schlumberger, a bit of a triangle here as well. Had a pretty decent move off of the lows, ran into all kinds of consolidation right there in the 40 range. You can see all of this noise right through here, just all kinds of consolidation there. And so moving up here towards that 40 level with an ascending triangle. So this is more of an ascending triangle where the other ones were symmetricals, but it's also in a triangle. So everything oil related is getting ready to make significant moves. Just watch, let them make their moves and then trade it directly from there. Don't rush, don't guess. Let them make their breakout moves. There's plenty of, it's another big triangle. So the high 40, low down around 30, that's 9 point, another 20% move. So all these triangles that you guys are giving me in oil, they're all looking like 20% moves. So there's no reason to guess. There's no reason to jump in. Let them make their breaks. There's resistance there at 40. If it breaks above that and you're looking at 8 or 9 points, then you're probably going all the way up to test these highs. If it breaks lower, then we're coming down to test these lows right down here at 29. So there you go. There's your targets, 49 and 29. Big moves. So no need to guess. Just be patient and wait. Let them make their moves, and you got plenty of time to make a nice directional trade from there. All right, couple more.
I think it'd be a good time to ask this question here from Mark, saying, "How about USO now, please?" Looks like
probably makes a lot of sense, doesn't it? We've looked at so many oil stocks. We might as well bring the big boy up, and as you would expect, it's consolidating. Not quite as nice of a triangle, though, as a lot of the other oil company stocks. This is more of a trading range that we have here. We had the triangle back over here. There was the big triangle, but we're kind of in a trading range here. If it breaks below 70, though, Katie, bar the door. That's pretty ugly to the downside. It might bump its head a little bit at 65, but when you see this kind of a move here with very little correction on the way up, that means there's very little support on the way back down. That could be where those big breaks of the oil stocks come from, is if we don't hold 70 here, we're at 50. Now, on the other side of the coin, if we can break above 80, which I don't think you can trade the USO until it breaks above 80 or below 70, because it's just in a big trading range. You could try an at the money butterfly, but it's been going sideways for a couple months now. How much longer can it go sideways? That's the issue with trading at the money butterflies. But if it breaks above 80, then you're back up here at all-time highs. So you've got a big move up above 90. So again, just be patient with the USO. If it breaks below 70, holy cow, you got a nice bearish trade. If it breaks above 80, you're going up to 90. You know, you've got OPEC saying that they're upset that the price of oil has come down. They liked it better when it was way up here. But if we go into a global recession here, which I think is highly likely, then you crush demand. Everything is supply demand, right? It always boils down to supply demand. And if you kill the demand by putting everybody into a recession, then the price is going to come back down. But we're right there at 70. So let's just hang on to that one too. A whole bunch of note taking tonight on all these positions. You know, if it does this, do this. If it does that, do that. So not really any significant, it's going to do this kind of calls tonight, but there's a lot of great looking trades here on the stocks that you all have given. But we just have to let them make their first initial move first. But then they're great. There's plenty of room to make good money on these trades. So I like the setups that you all are given. Just please be patient and let them make that move.
All righty. Thanks for that, Rob. Couple requests coming through from our YouTube subscribers to look at Tesla.
Oh, okay. Unless there's something significant, we'll let that one be the last one of the night. I figured that would be coming up with this move lower. It's probably been pretty painful for those that held on with this last split. So when you split and then it goes lower significantly, that tends to hurt more than had it dropped before the split. But sitting right here around this 300 level was key. You know, it bounced a bit today, which was nice. We're at a 46% wave forward. That could hold. 260 is a really important level. I think that's what we talked about in the weekend update, where I had Tesla in that one as well. Talking about coming down to hold at 260. We had this ascending triangle here with the top right around 260. So it's likely that it tests that. I would be surprised to see Tesla break that. But if it does, you know, watch out, because then you're coming down here to around 210. If it breaks that level, we're going to be down in here. So 260 is the key for Tesla. If you wanted to be really aggressive and we get a little bit of a bounce, the resistance is 300. So you got a pretty nice move there. So you could play that and bounce up there, or just wait. And if it breaks 260, you got to move down to 210. So you got a pretty decent move coming up either way on Tesla as well. So a lot of support resistance type stocks, triangles, a lot to talk about the next time we get together, I think. So thanks everybody for your attention this evening. For those of you on all the social media platforms, thank you for viewing. You know, I feel time's the most valuable asset, really in the forefront with my family right now, but time's the most valuable asset we all have, and we very much appreciate it sincerely when you devote some of your valuable time to being here with us, and we hope to try to make that an informative and educational use of your time. So thanks again, everybody. Have a wonderful week. We'll talk to you again.